Hello everyone, and let's talk about the news of the week. Friends, last week something happened that many thought was impossible. Even if you turn the blind eye to the charts, you couldn't miss this headline. Michael Saylor sold Bitcoin. Yes, you heard me right. The same Saylor who said, I will never sell a single Satoshi. The one who made strategy the main whale of the planet for the first time since December of 2022. Strategy sold 32 Bitcoins. And I know this is just a drop in the ocean of their reserves, and they have more than 840,000 of them, but fact itself. The psychological blow was worse than the news about inflation, and the market heard in this even the eternal lost ground. And here's the result. Bitcoin collapsed below $60,000 on this news and against the background of the strong employment data in the United States. At the moment, the price fallen to $59,227. The liquidation of long positions exceeded $1.6 billion per day. So now let's figure it out why Saylor decided to take this step and how far we can fall. Let's go. On Thursday, June 5th, the incredible thing happened. Strategy transferred 32 Bitcoins worth about $2.5 million. Where to? To the stock exchange. For what purpose? To sell. Of course, Michael Saylor immediately went on air and began to calm the alarmists. He stated that this was not a panic, but a capital rotation, that volatility creates opportunities, and that in fact the company is simply shifting to the AI infrastructure, and this outflow is temporary. But of course, traders are not stupid. A trader at QE Infinitive wrote on social media what many thought. Bitcoin just looks broken, even Saylor is selling now. And understand the scale. Strategy has 843,706 Bitcoins in its balance. 32 Bitcoins is nothing at all. But the fact itself, that's what matters. If the most ardent Bitcoin maximalists on the planet stopped being a pure buyer and started rewarding profits for some kind of dividends, what does this mean for ordinary mortals? This means that even the Pope of Bitcoin has seen the risks. He doesn't want to sell the entire portfolio, but no longer just wants to buy. Psychological milestone has been passed. And against the background of this news, the technical picture simply collapsed. The beginning of the week was unsettling. Bitcoin did not hold $70,000 and fell to $69,751. By Wednesday, we were at around $68,000, and on Friday, after the release of a strong report on the US labor market, hell broke loose. Investors have realized that the Fed will definitely not cut rates now, and the market has even started planning a rate increase before the end of the year, a complete reversal from the expectations of a reduction. 2-year US Treasury bonds jumped, the dollar rose, the Nasdaq 100 plunged 5%, the worst day since April 2025. The CHIP index has collapsed by 10%. And in that hell, Bitcoin broke through 60,000, touching $59,207, the lowest since February. Liquidations per day reached $1.6 billion, and it was a real bloodbath for long position holders. And by Sunday, the market had regained some momentum, returning above 62,000, but the bitter taste remained. While Bitcoin was falling, altcoins were just disappearing. Ethereum collapsed by 21.6% in a week to $1,575. Solana lost 23.7% to $63. XRP, Dogecoin, and BNB from 13 to 20% losses. And now the fear and greed index, if there's still anyone who's watching this, it is frozen somewhere at around 20, and that is extreme fear, and we only saw such figures during the FTX crash. And by the way, if you want to buy and trade cryptocurrencies, I would like to remind you again about the sponsor of my channel, which I used a long time before creating the channel itself. OKX Exchange is the best and most transparent solution for traders today. If you want to join and get welcome bonuses while supporting my channel, see the link in the description box down below. So, why does the market react so strongly to any news? And because the capital goes to another place, to AI. K33 Research has released a report stating bluntly that Bitcoin is going to have a difficult summer because all the money is flowing into AI stocks. While Nvidia and other guys are flying into space, investors do not care about Bitcoin. Bitwise echoes this. Chief Investment Officer Matt Hogan bluntly stated that the crypto market is now brutal. The market is shifting from momentum trading to counter investment. They need real user cases, working business models, and not just promises. And that's why, mind you, some small tokens feel better than flags. Hyperliquid, BNB, and Zcash showed growth in May, while Bitcoin and Ethereum were flat. Institutional flows finally gave a glimmer of hope. I mean, it was at the end of the week when Bitcoin was in ruins. On Thursday, June 5th, spot Bitcoin ETFs broke a record 13-day series of outflows, attracting $3.05 million. The amount is ridiculous, but the fact itself is important. This is the first day in 2.5 weeks when investors did not withdraw but invested. BlackRock IBIT raised $47.66 million. Fidelity and ARK, however, continued to lose, but the trend is a ray of light in the dark realm. Ethereum ETFs also broke their 17-day series of outflows, attracting $19.3 million. The entire inflow came from a BlackRock ETHA fund. And against this background, there's one exception, Hyperliquid, a platform that trades not only crypto but also tokenized stocks. Hype updated its all-time high this week, reaching $75.48 on June 2nd. However, it then adjusted to $65 along with the entire market. But comparing to Ethereum, which has dropped by 20%, this is just amazing. In May, Hyperliquid's share in the perpetual futures market reached a record 6.63% of total turnover of centralized exchanges. And in May, the volume in this segment exceeded $62 billion. And the most interesting thing is that tokenized shares of Tesla, Apple, Nvidia, OpenAI, and SpaceX valuation contracts are already being traded there. Do you understand where the wind is blowing? It's hybrid of crypto and traditional finance, and it's growing even as everything around it is falling apart. Pavel Durov is back in the news this week, and he announced that Toncoin was being renamed back to Graham, the historical name of the token under which the project raised $1.7 billion in 2018 before the showdown with the SEC. And the market reacted instantly, and Toncoin jumped by 19.5% in just one day from $1.89 to $2.26, and now it has been adjusted to $2. But there's a nuance here, and in the first minutes of voting, almost 90% of wallets opposed the renaming. However, one large holder with a balance of about 1.5 million ton overweighed the vote. Formally, the blockchain is decentralized, but in practice, we can see that everything is decided by just one whale. So, Sailor back top, Bitcoin has broken through 60,000, the fear index is at lows, altcoins are in ruins, but whales began to actively accumulate Bitcoin on the fall. Netwalk recorded a record number of transactions for amounts starting from $100,000. ETF outflows have finally slowed down, and the history of Bitcoin cycles says that a fear at this level of 20 is the best entry point, but this time it might be different. Technically, support is now 58 to 60,000, resistance is 65 to 67, and to talk about a reversal, Bitcoin needs to gain a foothold above 70,000 and its 200-day moving average. But that's going to be it for today. Link to OKX is in the description. Subscribe, click on that notification bell, and I will see you tomorrow. Bye.